Welcome back to another edition of Check Call. Don't forget to subscribe to Check Call, the newsletter on FreightWaves.com if you haven't already. Today we welcome back the one and only David Spencer, Vice President of Market Intelligence at Arrive Logistics. Welcome back, David.
Thanks, Mary. Great to be back.
I'm excited for today. I am always excited for this episode, though, because it's a cute little market breakdown. And one of these days, I think I might catch you off guard and get you to make an absolutely outlandish guess into the future. It hasn't happened yet, but I remain optimistic for the future.
Yeah, I kind of stick close to the vest here. What can I reasonably predict here? But I'm not against hot takes. We'll see what comes up today.
All right. Well, not quite heading into hot take territory yet. But the most recent market update. Yeah, the most recent. No, what is the official name of it? It's not just the market update. You guys have like a whole name for it, don't you?
Yeah, this shipper market update, monthly shipper market update, something like that.
In this edition of the Shipper Market Monthly Update. That's a lot of M's.
Monthly shipper market update.
In this edition of the Monthly Shipper Market Update, you guys are kind of seeing that there is some capacity tightening, which is, a welcome phrase to carriers' ears, as that's the prospect of spot rates increasing, and maybe we'll see some of that volatility and that demand spike. What are some key indicators that you're kind of seeing that are confirming these trends, that we are seeing that tightening of capacity?
Yeah, it's, one of those things where even if we're seeing it in the short term here, the big question is how long is it going to last? Because, what are the effects of the trade war going to be to demand long term, right? And so considering both of these things to really get to the end goal here from, say, a carrier perspective of raising rates, it's not just that capacity leaving, but it has to leave in excess of really what demand is doing, or if demand is on the decline. So, some of the indicators we've looked at to kind of see, hey, capacity conditions are a little more balanced this year, include things like, load to truck ratios or tender rejection rates. And really on a year-over-year basis, when you're talking about the same time frames, right, you see that increase in rejection rates around, say, DOT week to kick off that summer peak season like you did in prior years, and, at a slightly higher level, right? So we've kind of seen that slowly increasing rejection rate on a year-over-year basis continue. And, to us, that's a pretty good indicator of, improved balance, or at least improved increased sensitivity and shipper routing guides to these disruptive periods. So, those types of indicators are definitely things we look at and help us get a feel for that. But like I said, the big question is what's going to go on with demand, because even if we see capacity exits, that a weakening demand could offset that.
I think that's the kind of $1 million question, of what is going to happen. It's kind of like that hurry up and wait that everybody's doing, because there's the tariff pause is going to end, and then there's also a lot of uncertainty in the geopolitical side of things, and that can affect demand as well. So I think it's just kind of let's all just wait and see what demand does, because that'd be great if it could, do something.
Yeah, I think one of the signs on the demand thing that we're looking at is definitely increasing prices is something to be watchful of, right? As soon as you start to see consumer spending power decline, we're not exactly seeing that in the CPI data just yet, but all indicators are pointing to these tariffs are going to have an increase on prices, and that's going to translate, into an increased inflationary environment. And how does that weigh on the consumer? Are prices going to increase faster than real wage growth? And start to decrease consumer spending power. Those are the types of things to be really worried about. In addition to the uncertainty you mentioned, uncertainty causes analysis paralysis at a lot of big organizations, right? So instead of deciding to do something, they sit and wait and try and figure out what to do, because they're uncertain of, hey, what operating environment are we going to be in a month from now, 3 months from now, or if you have any reasonable shot of guessing what it's going to be like a year from now, right? So that slows down big capital investment projects, and those are big drivers of freight demand too.
Yeah, it's I think I agree with that analysis paralysis. Everybody's just kind of like, oh, we don't know what to do. We're gonna wait and see. But at some point in time, like, you do need to just go ahead and do it. Like, you just need to either make a decision or just not. Like, it has to be yes or no. I guess when it comes to something that is kind of normally in the summer, we see that spike of spot rates. We see the spot bookings as we have an increase in food and beverage moves. It's beer season. So so are we still seeing those same seasonal patterns for, maybe it's produce season, maybe it's summertime goods, like the barbecue, pretty much everything that would be at your summer barbecue. Are we still seeing that increase in that seasonal demand and kind of still seeing those patterns? And then kind of, are we seeing those long-term contract rates where carriers want them, or are they still kind of in they could be better?
Yeah, I mean, I kind of take that summer peak and think about two little pieces within it that I think see the situation you're describing, which is the increased sense of urgency to get hot dogs on store shelves, right, for summer cookouts, right? That's the end of May and the end of June, right? Really leading up to Memorial Day and leading up to July 4th, and really all we have in the books right now is that end of May and Memorial Day, and we certainly saw that with DOT week and the Memorial Day push. We saw capacity come off the road, right? We don't have to get into what that might speak to in terms of the condition of equipment that's out there on the roads, but it definitely caused some big volatility in the middle late part of DOT week and into the next week leading up to Memorial Day. Now, the June lull that we typically see in the first couple of weeks is real, right? I think we've definitely seen things stabilize, especially outside of the Southeast. Definitely a pretty stable environment out there right now. So we haven't quite seen that pick up in late July yet. I do believe we're going to see that. Right now there's not that urgency to get that freight moved, and there's time and flexibility on the shipper side. But as we get closer to the holiday, we're going to see some impacts for sure. And I think with that holiday falling on a Friday this year, July 4th, I mean, if you pick up a 3-day transit on Tuesday, you're holding on to that thing till Monday, right? So there's definitely going to be some elevated costs because of the way that week is playing out, and that early July period right there could get a little bit pricey, especially if you're booking last minute.
I'm going to make a hot take, and that is, if you don't have your freight booked and on a trailer by the Monday of 4th of July, it's not delivering that week. It's just not. Like, there's no, unless it's like, even if it's even if it's like a one day on Tuesday, I still think you're going to struggle to get those delivered on time unless it's like part of a dedicated fleet route. I think you're going to have a hard time getting spot rates covered because it's a built-in 3-day weekend where carriers are shut down and most shippers are shut down because it's a national or it's a federal holiday. And so I think you're going to see a lot of carriers start to dip out on Thursday afternoon. Like, pretty much if they're not getting unloaded Thursday morning, I'd be surprised if they take it and or it gets delivered before Monday.
We look forward to helping offer our customers solutions if they are experiencing those type of challenges that week. We're sure we can help make anything work there, Mary.
So a shameless plug that, if your carrier is starting to hem and haw about it, Arrive Logistics can make it happen for you.
No, I agree. It's going to be a challenge. I think, our expectation is hopefully that just means, a little more money to move that load if it really needs to go, and proper planning and flexibility on the shipper side will help eliminate a lot of that risk in their networks for sure. But yeah, if you're struggling that week, give us a call.
I absolutely love it. And, you guys are really easy to find. So when it comes to because we are seeing a slight tightening in capacity and there's some increase in spot rates, but I'm not going to say it's anything substantial, because it's one of those where I don't know if it's just kind of because of the summer freight or the summer demand, or if it really is a long-term sustained increase. But even then, we're not seeing that much movement on the spot rate side of things. So if I am doing, let's see, we're coming up on Q3. So if I have a bid that I have to submit for Q3 and I'm sitting there looking at how do I price this? What are things that I should be looking at to make sure that I'm pricing something like sustainably, so that way when it does come in I can still cover it, because I don't want to price it too low and then lose margin on all of this for this freight for Q3, but also I don't want to price it too high where I'm getting bid out of things. So kind of what should I be looking at if I'm looking into maybe submitting some bids or doing things in Q3 for like a mini bid or a project bid situation?
Yeah, I mean, I think first and foremost, you have to understand your own capacity. So, from a 3PL perspective, right, it might be a riskier time to go out and try and win new lanes and get aggressive because there's the uncertainty in the market, right? What's going to happen with capacity as it pertains to English proficiency or the visa enforcement, et cetera, right? There's going to be a lot of complicating factors. Are we going to get trade deals resolved? What does the recovering orders from China look like once it hits out west? I think you need to have a good understanding of freight flows regionally, where that freight's coming in, where that capacity is, where it's tight. I think we're going to see, obviously, as we move past summer peak, the Southeast kind of chill out a little bit, and we'll start to see imports ramp back up out west. As we see these Chinese volumes recover, that's going to create a shifting pattern. So just be mindful of the larger global freight flows, and otherwise, I think there's probably minimal risk for sustained disruption at this time, and knowing your cost and your capacity is probably the place to start.
I think that this whole like what we're in June, the first 6 months of the year have really been a strong testament to how, it really is a global supply chain. It's not even if you are primarily based in the US and you maybe only import a few things, you really are impacted by things that happened at a global level. And I think that's something that maybe people have kind of, I don't want to say forgotten, but like not necessarily realized the full extent of. And that is, when things do go wrong and things do happen in another country, like it can impact your freight flows here on a domestic level, because even if you're moving water bottles for a finished goods manufacturer, well, they have to get the aluminum from somewhere, they have to get the water bottles from somewhere, and if that's anywhere outside of here, or if there's just so many other factors that can come in and really kind of mess up a supply chain. And so I think now it's kind of another thing to keep in mind is, okay, well, I have to pay attention to the news and what's happening in on a global level, so that way I know I can keep my shipper informed and I can stay ready to kind of quickly adapt to changing situations, because I don't want to have a huge fleet or I don't want to have a bunch of carriers waiting for work in Southern California if there's no imports coming in. So I need to then maybe find some loads to move them to where I need them to be and where I do have freight moving. But yeah, I think that this is also like this is a stronger case to just kind of stay informed about what's actually happening and how it can, even impact your supply chain, even if your shippers are like, no, it's not going to affect us. And you're like, well, it actually might.
Yeah, I mean, anytime you're dealing with sourcing anything outside the country, right? There's geopolitical risk, and seeing a lot of that right now. I mean, Middle East is certainly tumultuous, and even though it appears there's improvements in the trade conversation with China, I don't have exact clarity on what that looks like long term yet. And so I think just being aware is all you can really control, and being flexible and finding ways to de-risk when possible. I mean, we've seen certain providers or customers even reformulate food products to cut reliance on certain ingredients out of these, formulas for their food products. So, ways to de-risk are things that you can control and paying attention for sure. And outside of that, you just got to be ready to flex or be flexible when these things occur.
It's kind of finally putting we can have a flexible supply chain as a result of COVID. It's really putting that to the test now of like, okay, how flexible can you be? How quickly can you turn on a dime?
For sure.
So when it comes to you, so you are from the desk of David Spencer. You have the market intelligence report or the monthly shipper market update. My mistake. When you were when you and your team were compiling this, what is one thing that kind of stood out to you that went, this is like, I don't want to say necessarily shocking, but the one thing that stood out to you and you went, okay, this is unexpected for this time of the year, or just like that one thing that that just kind of made you go, huh?
Yeah, I think the biggest number that jumps off the page was, and really not necessarily before the last update, but definitely as we look forward to putting this next one out, we're looking at, May import data and really seeing the impact that the elevated tariffs with China had on import volumes. I mean, we're talking about a massive decline, and the way that they've recovered, at least in the orders aspect of things, right? Not necessarily what's coming ashore yet. So just that volatility and the whiplash, the impact that the tariffs and the trade war could have on, how freight is sourced and what level people are willing to actually, pay those duties. So it's been pretty wild to just see that data come through. I mean, obviously we expected that when we saw those types of numbers, but really no idea just how impactful it would be.
That is one of the things that I do like about some of the data sets that come out like after you see things. Because I know we've talked about it on kind of like in the cold chain side of things, is where, okay, well, we're seeing less inventory on things, and there's no real way to prove it necessarily until people actually like report their inventories. But you're just kind of like, you're like, yeah, no, this is like my hunch is telling me that this is a thing. But then once everybody kind of reports and you get to see like, oh, I technically I was right, and you get to kind of see the significance of it. And that's, as much as I don't like waiting for data and I just like to have it like immediately, I do like looking back and seeing that like, oh wow, this really is a significant drop from where it should be. And I think it'll be very interesting in maybe like a year when you go back and look at 2025 levels, and you can see like the actual like yo-yo effect of it, and you can kind of almost see like the date things were announced and the date that things like went back in, because I think that's going to be so cool to look back on.
Yeah, something that we'll be studying for a long time and trying to unwind from the data to not corrupt, future predictions. Hard to take that year over year effect out when you're dealing with something like really an unprecedented trade war. So
Yeah, I hope that this is not just like an annual like May thing of like we're just gonna like have a cute little trade war for a month. I would like that to not be a thing, but that is interesting because we've had it. We've had these significant events happen, and you're almost like, okay, well, I have to take out the COVID years if I'm looking at like a whole thing, but then also like I still have to leave them in because it was an unprecedented time. And so I kind of need to know, well, okay, if I am going in through another unprecedented time, like, is it going to whiplash like this? Is it going to look like something else? Like, what is that going to be? And I think that's going to make for a very interesting and challenging data set to like look back on and get historical information from.
yeah, I mean, really another one of the shocking things, just to kind of piggyback on the prior question, is despite all the volatility, we're still seeing very typical seasonal patterns. Rates went up the weeks you'd expect them to, and they've come down the weeks you'd expect them to as well. And so, while it's impactful, it's also just a fraction of the freight that's moving, right? So, there's larger trends to pay attention to. What's going on in manufacturing? A big one of those, like I mentioned earlier, where inventory is at, how much pre-buying or pull forward actually occurred. You look at the logistics managers index report, and showing warehouse capacity is down, utilization up, warehouse pricing is up. I guess my hottest take, if we are going to get to that at some point, is that back when we were in COVID, I don't think the backlogs are going to get as wild, but you saw things like shippers using rail as a good way to kind of slow down that inventory intake, and that caused service issues in terms of boxes stacking up in rail yards and things like trailer storage. If you do see a consumer spending slow down and these customers pull forward inventory and continue to order here during this period of tariff pause, we might be in a situation like that where there's inventories that are getting kind of clogged up in the system and or need a place to be put.
I personally would like I would like to not try the record setting how many ships are waiting off the coast of Los Angeles and Long Beach. I don't really want to like revisit that record. I think that we're good. Let's shoot for something that's like a little more achievable.
Yeah, without the trillions in stimulus, I think we're that record is safe for now.
I think so too. All right. So if you could give one piece of advice to brokers and 3PLs and those kind of looking at something that resembles long-term planning, what would it be?
Yeah, I'd say not to overreact to the news, right? I feel like there's a lot of, shock and awe, week after week, whether that's capacity regulation or trade war and what that could do to demand. I think, continuing to practice, things that build a stable flow for you and allow you to kind of operate, know your capacity. Those are going to be the things you can rely on and count on right now. And if things get a little tighter, a little softer as a result of what's going on, I think, focusing on how you adjust your business is a better use of your time. Like I said, despite everything we've seen in the volatility with imports, et cetera, we still have looked at pretty typical seasonal patterns, right? And so don't get distracted from, the news. Continue to focus on operation execution. And, I think that's still going to lead to success right now.
I think that's a very good point. Like, just focus on what you can control and kind of mind your own. And then, like, that way you can just adapt. Because otherwise, if you sit here and look at, like, oh, well, this is happening over here, this is happening over here, then you're just like running around with the chicken with your head cut off and you're not actually making any real progress. And chances are you're probably going to let some things fall through the cracks for your shippers. And that's going to not work out because I just read something the other day that it was like a NTT data study and they said that like 80 the shippers are only 89% happy with their 3PL provider. And that's down. That number keeps going down every year. And that's not a good look, you know?
It's a tough time as an operator in this space. It's a tough time as a carrier, and so shippers have had that upper hand. I think rightfully so. They've looked for ways to find more efficiency in their network, and it comes back to knowing your business and what you can handle at what levels. On the broker and carrier side of things, and certainly the conditions don't help, but knowing your costs and cost to operate and what works for you is a good way to navigate these waters, stay in the game, and be ready to capitalize when conditions turn.
I love that you just said stay in the game because today, David, we have asked you many ridiculous questions on this show. And I love that you're a great sport about it. But today, I think we're getting into the heart, maybe, of who David Spencer is as a person. And this is going to be if you had to pick a walk up song for going into a meeting, what would it be? And this is like everyone is picking a walk up song to go into this meeting. But let's say that you're coming in last. So you've heard everyone else's. What's your walk up song?
This is tough. I looked at this question, and I had a good 3.5 hour drive up from Laredo to really flip through my iTunes and figure out what to play. And gone back and forth. I think the easy one to pick here is "Can't Stop" by the Chili Peppers. "Can't Stop,"
Mm.
"Addicted to the Shindig." I mean, I love this game, and we're in it. But one when I'm just feeling confident, Gary Clark Jr.'s "Bright Lights" really kind of stood out to me. You're going to know my name by the end of the night, right? So I like that kind of mindset and that confidence boost that comes from that. So I guess it depends on the mood I'm in.
I really like that the second one because it's like you're gonna know my name by the end of this meeting. That could also be a little intimidating, which I do appreciate.
It's a walk up song.
I absolutely love that. That was good. If someone has a recommendation for a personal walk-up song, or if they want to, just pitch it for your next meeting, or if they have questions about navigating the market, where can they find you outside the show?
Yeah, I think ridelogistics.com is definitely the first place to go. That's where you can find all of our resources, navigate to the insights page there and find the reports that we've talked about today. And, you can contact me there. Also very active on LinkedIn, and you guys can reach out to me there and connect. I definitely love engaging with different audiences on that platform, and on a somewhat regular basis here on Check Call with Mary O'Connell.
You are here pretty regularly. It's not a market update until we've got David. How do we know what's happening in the freight market if we don't have David?
There's a lot of resources out there today, but it's a pleasure to be here, Mary.
It's nice to see. It's nice to talk to you instead of just read your words on the monthly shipper market update.
Well, thank you so much for having me again, Mary, and I look forward to the next time as well.
I look forward to it as well. You can find Check Call the Podcast anywhere you get your podcasts, like Apple Podcast and Spotify. Don't forget to check out all the other incredible FreightWaves shows, and don't forget to subscribe to the newsletter on freightwaves.com/checkcall. See you on the internet.